All right. Hello, everyone. Welcome back on Zbit. I'm Juhi Singh with you today, and we are going to talk about cryptocurrency. We have done that in the last stream. We talked about cryptocurrency, the millennials, and something about risk appetite and everything. And in this video, we are going to do something different, something more, right? This time, we are going to learn about crypto and stock market. See, many of you might think that crypto and stock market are kind of similar, but that's not the case. So we are definitely going to take a deep dive into that, and we are going to learn about the altcoins also. The Ethereum, the meme coins, and we will also learn about news, the new trend of crypto. So there are a lot of things that is going to happen, and I'm pretty excited about it. And I hope you're excited too. We'll wait for about 2 minutes, and we'll see how many of you join us, and then we can go ahead with our stream. But after listening to the first stream, how many of you have actually started doing cryptocurrency, at least started reading about the trend, reading about the market? How many of you have at least done that? If you're someone who is interested in investing, although with all the risk that it comes with, it's something that when you learn, it's fun. It's a way where you earn more money. So yes, obviously investment is good as long as you are aware about what is happening, and you are aware about the market, and you're doing your proper research, and you know what your risk appetite is, and you are not missing out on that. So yes, that's the thing that you have to actually keep in mind. Now, yes, like I said, on this stream today, I am going to tell you about some crypto news. We are going to discuss the market trends, and we are going to learn a lot more about cryptocurrency, right? Now, if you're a beginner, this is an absolutely informative session for you, because once you start with cryptocurrency, there are so many jargons that come into picture, and that's when we get all confused and all worried that how are we going to exactly cope up with this, how are we going to tackle this, and how are we going to invest when it comes to cryptocurrency, right? So let's first, the first thing that we are going to tackle today is understanding crypto market versus the stock market. Now see, this is something that is sometimes very confusing. People might think that cryptocurrency, the market, and the stock market are similar to each other, whereas that is never the case. Okay, that is never going to be the case. They are both very, 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 very different. Now, uh, let's see how they are different. Okay. Now, I had told you about this one term, yes, like day before yesterday, I guess, when we were on live, and I told you that volatile market. Cryptocurrency is a volatile market. Now, about this volatility, okay, very sorry, but yes, let's see. Okay, okay. So, like you can see, when I'm also streaming, I'm kind of a drama queen. I'll make all faces that I have to. I'll do all the gestures that I'll have to. I'm more of a drama person, right? So crypto is similar to that. Now, but I do a minimum of a drama, but crypto is high drama. Okay, crypto is high drama, whereas stocks is a slow burn, like movies which are very slow, and not everyone likes it. But obviously, stock market is not like that. Even if you don't like it, it's a slow burn. You invest and it gives you returns, right? Now, see why I'm saying crypto is high drama, because it's a more volatile market, right? Every now and then the numbers are changing, every second it's changing. Even if I'm sitting over here and if I'm telling you numbers, if I'm actually sitting and live watching crypto on my screen, I am pretty sure that every second that I talk, there is a change in crypto market. There's either a rise or a drop, and there is always a change, right? uh, you can take Bitcoin for example. Right now, the prices of Bitcoin can swing by thousands of dollars, okay, and that too in a single day. It's not that it's a market which is like as quiet as lake, let's say lake, it's quieter, right? So it's not quiet, it's always running, there's always a change. Every minute it's either red or green, right? Now that's the thing. But when you talk about stock market, it's an absolute contrast to the crypto market, right? Now stocks are generally things that move gradually, okay. Now stocks, you will never see that there's a sudden spike this minute and the next minute there's a sudden drop. Nothing like that happens when it comes to stock market. If there's a growth, it's a gradual growth, okay. Why this happens is because stock market is something that is influenced by companies, it's regulated by government, there are economic policies, everything plays a role when it comes to stock markets bar, right? But when it comes to crypto, that is not the scene, because it's not regulated, the government is not watching, it's a completely unregulated market that way, and it is completely open to public. Since there is no bank, there's no government involved, it is kind of a volatile market. Let me give you an example. Okay, now in November 2021, Bitcoin hit its all-time high of around $69,000. Yes, and just a few months later, this is by mid 2022, it crashed down and it came below $20,000. Yeah, and that's like buying an iPhone today, and tomorrow you get to know that the iPhone you bought today doesn't even is not even worth a second hand iPhone, right? So that's kind of scary when you even listen to it right now. You buy something new today, and tomorrow, if it is not even worth the second hand price, then that becomes very scary, right? And that's why people are very skeptical of going to crypto market. But then again and again, I've been saying this: you have to be very, very, very vigilant on what is happening in the market and not get into panic mode. Usually investors get into panic mode, they start selling and buying like vigorously, and that is something that actually kills the game, right? Now this was about Bitcoin. I told you that in 2021 it hit the record high, but then it also crashed down within some months, right? Now, when it comes to stocks, let's talk about compare it with Apple stock. Okay. Now, what happened with Apple stock? It will grow gradually. Yeah, it steadily grows over the year, and there are no dramatic drops. Okay, unless there's something big that has happened in the market. Till then, there is no big change that you will see in a stock market, right? Why? Because stock markets are usually backed with the company's performance, and that's why this is the case. So, say if you would have invested about $1,000 on Apple stock in 2010, then it would be worth about $10,000 today, right? So, it's a steady growth over the years, right? But if you would have invested the same amount in Bitcoin in 2010, it would have been worth over $500 million today. So, absolutely, there is a big change. It's like $10,000 and it's like $500 million. That's a huge difference that you see when it comes to crypto and stock, right? But then with power comes risk. As powerful as you see crypto is, it's also very, very risky. So you have to be very sure of when you are investing, how you are investing, and how mindful you are while you are doing so, buying or selling crypto or stocks both, right? Now see, there is a major difference when it comes to crypto and stock market. That is time. Okay, like stocks likes to sleep, okay, like me. I would love to sleep, yeah. Like sleep time is the best time, you never want to leave your bed, you're all like relaxed, right? So stocks, they have a working hour, they're like corporate workers. 9 to 5, I'll work this And then after that, I don't care, right? I will do whatever I like. I will go with my family. I'll do this, I'll do that, whatever. But it's not really working. Stocks are not working after a point of time. Whereas crypto is someone that doesn't even sleep. They are continuously working. So crypto continuously works. Okay. So the stock market, it operates from 9:30 a.m. to 4 p.m. Now this will obviously depend from country to country. The time might change here and there, but it works from Monday to Friday. Okay. So Monday to Friday, 9:30 a.m. to 4 p.m. is what stock market is working. Okay. Now say something big happened in the market over the weekend. Okay, so Saturday, Sunday, something big happened, like changed everything. Some big decision came into picture. But do you think stock market will react to this if something has happened in the weekend? No, it doesn't react. Okay, it won't react until the market reopens on Monday. So anything happens over the weekend, the stock market won't react, but Monday it will start reacting again. So that's the case with stocks. Whereas when you talk about crypto, okay, I told you it's volatile and it is open 24/7. Crypto doesn't sleep. That is why every minute is important, because it keeps changing. You might sleep, but crypto is not sleeping, right? You might see some rise while you were going to bed, you slept. In the morning you see a sudden downfall of crypto. That can happen, right? So yes, it is 24/7 open, and the prices can change anytime, even while you are sleeping. I'll give you one example. Okay, this has happened in May 2021. Elon Musk, he tweeted basically at 11 p.m. that Tesla would stop accepting Bitcoin due to environmental concerns. Now, after this tweet, the entire crypto market, it just crashed overnight. Overnight, it just crashed. Okay, and the stock investors, whereas if you talk about them, they were just unaware. They were peacefully sleeping. They didn't know anything. But anyone who was into the crypto market, they knew that overnight it was changed. Everything fell down. Everything was crashed, right? So Bitcoin's price dropped by over 10% overnight that day, and going from around $55,000 to nearly $49,000. That's the drop that it has seen. Now, other cryptocurrencies like Ethereum, Dogecoin, and altcoins also fell sharply, right? And the total crypto market lost over $300 billion in value within 24 hours. Can you think about that? So, one big change in the market, and suddenly everything is in loss. So, that's what it was about, okay? Now, in a traditional stock market, what was their reaction? See, it was a much smaller and a delayed reaction when it comes to stock market. After seeing this tweet, it's not that only crypto had to go through the losses. It was also stock, but then it was slow. It was delayed, right? And it was not that big an impact as it was on Bitcoin and other altcoins, right? So Tesla stock also dropped by about 1.3%, and the next day it dropped because of the news, and the Bitcoin, the volatility around it. And Tesla had also invested, $1.5 billion in Bitcoin, right? And so investors were very concerned about the impact on its holding. So obviously that was a concern when it came to stock market. But then it was still very slow. It was still very small compared to what cryptocurrency had to see. Now, other major tech stocks and the overall S&P 500. I'll tell you what S&P 500 is in case you don't know it. Now, these weren't really heavily affected. Okay, now most of the traditional investors and funds, they're not directly tied to the Bitcoin prices. So there wasn't a major panic in the stock market area. So stock market was kind of low, right? They were all calmed down. Now, before I move on to the next point, where I'll tell you about the regulations, the difference between the stock market and the crypto market regulations, I'll also tell you what S&P 500 is. Now, this is short for Standard and Poor's 500. It's a stock market index. Okay, this means that it's a list of 500 of the biggest and most important publicly traded companies in the US. Okay, like say for example, it's Apple, there's Microsoft, there's Tesla, there's Google, there's Coca-Cola, etc. Okay, let's think of it like this. Okay, now imagine you are walking into a supermarket. Okay, and this supermarket only has 500 top selling products in the country. Okay, whatever happens to these products gives you a good idea of the entire market, how it's going to do. Okay, that's what S&P 500 also does. It gives you a snapshot of the US stock market's health by tracking these top companies. So basically it tracks these top companies, gives you an idea of what's going to happen. Now, moving on to what's the difference in regulation when it comes to stock market and cryptocurrency. See, stock markets are heavily regulated. Okay, now the government is regulating it. There are banks which are involved. Now, it's also because of these regulations that it becomes very stable, also, right? Unlike crypto. Now, crypto, on the other hand, is largely unregulated. It's still not regulated, and that's why it comes with both opportunity and risk at the same point of time. Say, for example, in 2021, China banned crypto trading. Okay, and this caused a crash in market over 30% crashed in a week. In a week, that crash happened. Now, if this happened in stock market, the trading would have been halted to prevent further panic. Okay, so usually with crypto, because it's not regulated, if a fall happens, if a rise happens, there's no one who is actually keeping track of it. But when it comes to stock market, there's someone who will regulate it, so halts happen so that there's no panic in the market. Because the moment investors panic, they try to sell or buy a stock, and that's where the problem starts happening, right? Now let's move on. Let's move on to the next segment where we'll be talking about latest crypto market and the new trends and the news. Okay. Now, so what is happening in crypto right now? What exactly is happening in terms of both rise and drop? See, Bitcoin's recent surge or drop, if you see, no, currently, if you go ahead and see, it will keep changing. So I'm keeping just one point which I researched last. Bitcoin is currently, currently, it is at 74 lakh 65,629 rupees and 44 paise. Say it is currently weighing this. This is the amount of one Bitcoin. Okay. Now, after dropping, if it drops, now that it has dropped, okay, if this drops, this becomes there's a drop of 9.7% from the past month. Okay, so in March it was somewhere about 8 lakhs or something like that, and currently it is at 74 sorry 80 lakhs or something like that. Now it is at 74 or something like that. So there's a 9.7% of drop. Okay, so why is this happening? Okay, there's a drop now. So why did that happen? Now, Bitcoin prices often move based on news, global events, and big investors' marketing moves. Okay, say for example, if Elon Musk tweets that I am buying Bitcoin again, boom, there will be suddenly a price jump in hours. He tweeted that, okay, we are not going to invest in we are not going to take Bitcoin anymore. It dropped. But if he tweets today that, okay, I'm going to take Bitcoin again, I'm going to buy Bitcoin again, the market will suddenly boom. Okay, now imagine if a country bans Bitcoin, the price could crash overnight. Okay, say for example, if today India says or any other country says that, you know what, from today in our country Bitcoin is banned, the market is crashed. Okay, so that's what happens. So it's very emotional and news driven market. Okay, unlike stock, because again you can regulate it, you can't regulate crypto, and that is why it's very emotionally driven market. Okay, now there are some whales. There is a term called a whale. So what's a whale? Now in crypto, a whale is someone who holds a lot of coins, okay, like millions and billions worth coins they hold, okay. So if they buy, people think maybe something big is coming. See, this happens even in stock market. The moment someone starts buying the stock, people start thinking that, okay, something big is going to come. That is why people are going to buy stocks. And then suddenly there is a rush of buying that particular stock, right? Same happens with crypto. If these whales, who are someone who are holding a lot of coins, if they start buying a lot of coins, then they people think that, okay, something big is going to come, and they start following them, right? And then there is a rise. But if these whales, they sell, then the panic starts, okay, and the prices start falling. That's where the bull and the bear market come in, and we have definitely talked about that, yes, day before yesterday. Now, never follow these hype blindly, okay. This is a pro tip, this is a beginner tip, sorry, tip. Beginner tip is that never follow these hypes blindly. I have told this in the previous stream also, that whatever happens in the market, do not just blindly follow a person. Go ahead, research yourself, and only when you are absolutely sure of what is going to happen, only when you have come to a decision, then you go ahead and invest, or buy or sell your stocks or your crypto for that matter. Because what happens is, if you don't do the research properly, and if this goes haywire anywhere, that's your loss. So yes, risk is something that is always associated with both stock and crypto, and that's where it becomes very important that you are knowing your risk appetite, and you know what exactly you are doing when it comes to market trends, right? So it's very important that you watch what the smart money is doing, okay, but always do your own research, always do your own research. It's absolutely necessary to hear news, but even after listening to the news, even after seeing the smart money, you have to go ahead and do your own research, right? That's very, very important. Now, there is an Ethereum upgrade. Okay, the next news and trend that we are going to talk about is Ethereum's upgrade. And we will also talk about why it matters. But we'll take a short 2 minute break because keeping yourself hydrated is very important. So let's do that. Keep yourself hydrated. And if you have any questions by that time, do comment them and I will be happy to answer them. Make sure that if in case you find any kind of issue, if you have any kind of questions and doubts and you are trying to understand something, go ahead, comment down, and we will help you out. Okay. See, there are so many things that are happening in market. If you have doubts, go ahead, comment them so that we know what doubts you're facing and we can answer you back and clear off those doubts, help you learn terms if you haven't understood any, or if you have come across something and I haven't told you about that, you can definitely go ahead and write down that on your comment section and we'll definitely tackle that. Now let's move on. Let's talk about the Ethereum's upgrade that I was telling you about and why it matters to us. See, Ethereum recently underwent an upgrade and it's called Ethereum 2.0. Now this is also called as the merge. Now, this aims to make transactions faster and cheaper. So this is why Ethereum 2.0 has come into picture. So what has changed? Just because 2.0 came, what did change? I mean, it's the same thing. It's Ethereum only. No, there are changes that has happened. Now, the moment some upgrade happens, it happens to bring something down in the market, right? So this has been done to make the transactions faster and cheaper. So in that term, it has moved from proof of work to proof of stake. Okay. So don't worry about it. This just means that it now uses much less electricity. That's it. There's nothing like, oh, something big happened. No, it's just that it's going to use much less electricity. Yeah. Obviously, transactions will become faster and cheaper, and it will be better for environment. So this is what has changed. Okay. So let me explain this to you using an example. Let's say earlier, sending money on Ethereum was like using a courier to deliver a letter. Okay, slow and costly. You see, letters when we used to send earlier, maybe in 80s, 70s, 80s, like that, when letters used to go around, it was slow, right? And if you, even if you have to give some emergency news, it used to be like you will get it only when the letter reaches you. Yeah, there was no faster communication. So letter, since it's like, delivering letter, it was slow and it was also costly at the same point of time, right? But as the upgrade happened, now it's become like sending an email. Okay, it is quick, it is cheap, and it is easy. So the moment you make something affordable, that's when it starts doing wonders in the market, right? Because everyone starts using it, everyone suddenly gets interested into it. So that's the same thing with, even with Ethereum, right? Now imagine if a bank like HDFC or ICICI suddenly reduces the transaction fees and makes the payment instant. What would you do? You would definitely rush for it, right? So that's what it is, that's what is happening with Ethereum. The moment, like I said, the moment you bring that affordability into picture, people start getting interested and they rush to do that thing, right? So even if bank does something, people will rush to do it. And if Ethereum has done something, if Ethereum has become easier to use, if it is faster, if it is cheaper, obviously people will start rushing. And that is what is happening, and developers, they have loved it, they've loved this change, and more people are starting to use it again. Now, Ethereum is something that can support more apps, NFTs and financial tools without slowing down. So that is why people are getting more interested into it. Now, let's talk about another trend. I told you about the Ethereum trend, how it has like moved to Ethereum 2.0, and how it's going to, be really helpful, both environmentally and also using less of electricity, and also it becomes cheaper and the transaction is much easier now. So let's talk about another trend, that is meme coins and hype investments. Okay, now this is another form of trend that goes on. Now, from Dogecoin to Shiba Inu. Now, these are meme coins and they have been making headlines again. Now, what's happening? What's happening? And if they're making headlines, should we invest? Well, see, think of it like investing in a viral startup. Many of us, we think that, there's some kind of startup happening, and okay, it has come into picture, this is becoming viral, and we spend on it, we invest for that, right? So this is like that only. The hype can drive the prices up. I told you, right? There are two ways you can do it. Either you build a news around a stock, or or some market you trend. Either you build a news around some trend, or you just start buying stocks or the crypto, like left, right, and center. The moment you start doing this, people start seeing that, okay, why are people buying the stock, why are people buying this crypto, and they get interested and they start buying it, like left, right, and center. Everyone is buying it, right? So that's what it is. So you think of it of starting, investing in a viral startup. Now, the moment there is a hype, there is a price up. But if people lose interest, the value can rush down overnight. So that is also a risk that you have to be careful about. Okay. So these coins, comes with a lot of risk also. And one of it is that they're not built on strong technology or long-term goals for that matter. So that's why they're a little risky, and people don't really want to go for it. But then at the same point of time, people who are willing to take that risk and have that risk appetite, they are definitely going ahead with that, right? And see, meme coins, they are more like lottery tickets. Lag gayi to lag gayi. It's like that, right? So it's not exactly a safe investment. It's a lottery ticket that you are actually spending on. So again, you have to be very sure about your risk appetite when you are when you are actually investing into meme coins. Now let's talk about stock market in terms of this. Okay, the trend that we are talking about, which is the hyper investments that people do. See, in 2021, there was something called GameStop. If any of you have that idea, you can drop that down in the comment section below. But for the people who don't have the idea about GameStop, see, a group of Reddit pushed the prices up like crazy. Okay, so what happened was they just, I don't know how. So basically, this group, what they did was they just pushed up the price. Okay. Now, not because the company was doing well. It was not that the company was doing well or anything good was happening and they did that. No. But because everyone just wanted it on the trend. Okay. So that's exactly how meme coins behave in crypto. Okay. There's a lot of sound coming, I guess. Okay, so coins are like that only. You create a hype. You can create a hype. You can push the prices like crazy. But then, if people are not interested, if people think of it like, okay, fine, well researched people, they sit, they are like, maybe this is not that great thing, and they don't invest. If there are chances of prices going high, there are chances of prices going low also. So, there's always a risk involved both in stock market and in the crypto market. Now, see, when we start investing, there is one thing that always happens, and that is jargons. The jargons that comes into picture. We usually don't understand that, and we get all confused. Okay, so even today, even in this stream, I'll tell you some of the jargons, and I'll briefly explain you what exactly that is. And in case you want more explanation, do let me know. I will go ahead and explain you about more jargons and more terms that we use during crypto. Now, see, there is bull market and there is bear market, and we have talked about it in the last stream, right? That bull market is where it grows, bear market is where it just falls down, right? But this is the basic, whenever the prices are going up, the market is bull. Whenever the prices are going down, it's the panic mode on, and that's when the bear market happens. So say if you bought a Bitcoin in 2021, okay, and this was the time when Bitcoin was say about $60,000, okay, and you see the trend today. Okay, I told you that today it's 9.7% of fall is there, right? So today, if you see that match that trend, you will see that you will be in a loss. So you are in the bear market right now, right? But if you would have bought it in 2015 for $500, you'd be enjoying the bull market right now. Okay, so the market trend changes depending on when you are investing, how you are investing, right? Now, let me explain this to you by giving you an example. Let's say you bought one Bitcoin in 2021. Now, this was its peak. Okay, now around $60,000 it was costing. So, basically, this was the peak time for Bitcoin. Okay, now today Bitcoin is around $83,000. So, you'd actually be in profit, right? Because you bought it in 60,000, but now it is 83,000. So, you have a total of about 23,000 profit, right? But if you would have sold it during the dip in 2022, because it dipped down, right? In mid of 2022, I told you that there was a crash in Bitcoin market. Then it would have crashed below 20,000, 23,000, like that. It would have crashed, and you would have faced a bear market. You would have faced loss, so you are now stuck in the bear market mentally and financially. So this is where you have to think. Okay, now imagine someone bought Bitcoin in 2015. Now, this is when it was just $500. Okay. Even during the worst crashes, their investment would have grown massively. Okay. That's a classic bull market story, buying low and riding the wave up. So you buy low and then you go up. This is how market works. It's something that you have to sit and you have to analyze. Uh, After listening to all these jargons, after listening to all the examples in the world, nothing will be clear in your head unless and until you go and try it hands on. Okay, so that's very important. But yes, obviously, you have to know the jargons, you have to know how it works so that it's easier for you to take a call when it comes to investment, right? Now, there's something called market cap that we hear about, right? What is market cap? Anyone has an idea of what market cap is? Can anyone tell me? When you hear the term market cap, what do you understand with it? Yes, it's a short for market capitalization. Okay, so it's a short for market capitalization, and it tells you how big or valuable a cryptocurrency is. And it gives you a rough idea of how much the whole coin is worth in total, not just one piece of it. Okay, now see, I told you that how it shows how big a cryptocurrency is, but there is a simple maths involved in over here. Okay, so market cap is equals to total number of coins multiplied by current price. Okay, so the total number of price and the current price, when you multiply them, that shows you the market capital. Okay, told you that it's a simple formula: total number of coins into price of each coins. Okay, say for example, if a bitcoin is 19 million in circulation, okay, and the price of each coin is $83,000, then the market cap is the market coin, the total number of coins into the price of each coin. Each coin's price, what did I tell you? It was 83,000. And the total number of coins is 19 million coins, right? So you do that 19 million into 83,000, that gives you $1.577 trillion. Wow. So that's the market capital. This is how you calculate market capital. Now, let's get down to real life comparison of stocks. See, in the stock market, we do the same thing for the companies. Okay. Imagine a company like Apple. Okay. Now, if it has 1 billion shares and each share is worth, say, about $150, the company's market cap is $150 billion. Okay, so in the same way, the cryptocurrency like Bitcoin, they have a 1.5 trillion market cap, means it's as valuable or more valuable than some of the biggest companies in the world, like Tesla, Facebook, or Samsung for that matter. Now you'll tell me that, okay, why does this matter to me? See, higher the market cap, more is the stability, more is the trust. Okay, wherever you see that there is a lot of money involved, you tend to have more trust. Okay, you know that, okay, see, even if the market crashes, I will not lose too much, right? So when you see that higher market cap, you find that stability in see, just like you'd feel safer when you have invested in a well-known big company. When we start the investment, usually what happens is we think that we will first start the investment in a big company. Say, people go for Tata, people go for Birla, right? Reliance, things, big companies with big market capital, right? So they go for safer companies when it comes to stock. Now the same goes for cryptocurrency also. People feel safer with top cryptocurrencies like Bitcoin, Ethereum, okay, because of this size. They're big in size, and that is why people have more trust. Whereas when it comes to smaller market cap, okay, now this is also called low cap altcoins. See, they can grow faster, but they're also riskier. Like I told you, meme coins. You can grow it faster because maybe you have built a hype around. Maybe you have given some news that basically tells people that basically interests people to go buy it. But say if that interest is not intrigued, then you can be in the loss. So it's a dicey situation when it comes to smaller market cap coins. So it's like kind of investing in a new startup company. You never know if it will be a failure or it will become a success, right? So that's what smaller market is. Okay. Now, see, when you're investing in crypto, you definitely want to make money. Everyone wants to make money. I took that dramatic pause because I told you crypto is very, very dramatic, right? So, uh, making money in crypto is something that everyone sometimes thinks about. But then when they start reading about it, when they start learning about it, it might be like, mm, it's kind of risky and I'm not understanding certain things. So, making money is important, but at the same point of time, that safety is important, right? So, how are you going to be safe when it comes to making money in crypto? All right. See, the first thing is long term investment. I have always said this. I have said this like multiple times, even in the previous stream, that waiting for long term in the market is something that makes your investment worthwhile. You know, the moment you start panic selling or panic buying, that's where the problem starts. Yeah, that's where you lose money. That's where the risk of loss is higher. Okay, so when I say that you have to do a long term investment, what does this mean? You buy a cryptocurrency and then you hold on to it for years. Okay, it's not like you bought it today and you sold it tomorrow. Nothing like that has to happen. It has to be long term. You have to wait. Every story that I said in the millennials stream was about waiting, right? People bought it in 2010, but then the value suddenly increased in 2020 or 25 or 24, like that, right? So the value can increase any given point of time. You invest $10, it might become some $100 million the very, maybe after 5 years or 4 years or like things like that. But you invest and you forget. See, it's one thing, very sorry. I think there was something falling down. Okay, so there's one thing that I was telling you about is you invest and you forget about that money, forget about selling it, forget about buying it, doing whatever with that money, just invest it and forget it. So when I say long term investing, it's also called holding. Okay, it's also called holding, and here you buy, you keep it for years, you ignore that short term up and down. Okay, it will eventually give you the returns. Now the question is why you have to do it, and why do many people choose to go for a long term investment. Now they believe that the value will grow a lot in the future. Okay, considering there are so many news coming in, there's so many changes happening, you never know which news, which change, which technological advancement would bring a change into market, right? So people thinking about that future, that in the future it will give me more money, it will give me more returns, it will give me more profits, they keep it in the market. Okay, now there are some people who bought land, who bought gold a long time ago. Like, say for example, specifically in India, we have seen this. Our grandfathers, they have bought some, big lands, and they've kept it, and they never use it. It's never used. Every time you have to talk about your land, your property, it's always said that it will be used in the future. Future may come aega, future may come aega is something that you say, you keep saying on to that, you hold on to those belongings, to those investments. Why? Because you know that in future this might become super 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 valuable. Okay, like I'll give you an example. If you buy a land, okay, and say you bought a land in some 1970s. Okay, your grandfather bought a land in 1970s in some area of some state. Okay, today, the government is planning to take out a railway line from that area. Obviously, you will get some cost for that, right? So you are making money. Okay, maybe that property, near that property, there are big malls opening. There are big multinational companies opening. Your land prices keep rising, right? So that's why you hold on to it, because you are thinking about the future, that 10 years down the lane this property is going to give me higher returns. Even today, I've bought this for 10 rupees. 10 years down the lane this will be of 1,000. So something like that comes into the mind, and that's why people go ahead and do a long term investment. Okay, I'll give you an example for this. See, there is a guy named Christopher Koch. Now he's from Norway, and he bought Bitcoin worth $27 in 2009. Okay. And then he forgot about it. He just left it. Okay. And then in 2013, he checked again, and it has grown to 88 lakh plus. Okay. 88 lakh 6,000, something like that, something, some dollars like that. Imagine that. Yeah. So that long term investment eventually paid him off. It was just $27, and now it's in like what, lakhs, some millions, right? So when you talk about stock market, now this was about cryptocurrency. Now, because I've told you cryptocurrency is a very volatile market, every time it's changing. It's sometimes red, it's sometimes green, but yes, it gives you high returns, right? When you talk about stock market, it's similar to cryptocurrency, right? You have to hold your holdings. You have to see that you are not just panic buying or panic selling at any given point of time. Okay. See, when you invest in a company like Amazon or Apple, and if you would have invested in these companies in the early 2000s, okay, and if you would have not sold the holdings when the prices were dropping, you would have been a millionaire today, right? You would have been a millionaire today. Why? Because see, there is a myth that goes around every now and then that, if the market is crashing, you will lose a lot of money, you lose a lot of money. See, you are losing money, but you just leave that money there. Even if you're losing, just leave that money there. Stay calm, just relax. The market, if it has gone down, it will someday go up also. So you just have to wait. Waiting is an art. I told you this, right? Waiting is an art, and you have to become an artist like that. So you have to wait for the stocks, and you will have to wait for the cryptocurrency market to go up if they have gone down at any given point, and not panic buy or sell, right? So now, see, this long term investment. It is absolutely good for people who don't want to stress daily. Okay. Now, if you're doing a short term investment, obviously you will have to sit daily. You will have to give your every minute, every second to that investment, right? And you will have to keep a very vigilant eye on the market trend at that point of time. But if you want to relax a little, you keep your money in the market and forget about it. Okay. So if you're okay to wait for a few years, long-term investment is something that you should be choosing. Now, another trend, another way of making crypto money safely is trading. See, it is safe as long as you read and you do your own research. The moment you leave it on someone else, you let the hype drive your decisions, then it becomes absolutely unsafe, and there are higher chances of you to lose money at that point of time. Okay. Now, let's talk about trading. Here also you make money, but it's a short term profit. Okay, because it's like morning, uh, in stock term, if you see morning the market opens, and by evening you have sold the shares that you have bought, because now you would have seen that, oh, okay, this went high or this went low. Now both can happen. Either it could have gone high or low. The moment the market is closing and you are selling, it can either be a profit or a loss, right? Depending on the market trend of that day. Similarly, in cryptocurrency, the moment you put money, and then you think that, what, I'll keep it for say this day, and then I'll sell everything that I have tomorrow, and I'll get something. See, it can be like either it's in profit or it's in loss. So this is something that you have to be very careful about. You have to see what the market is doing, how it is running at that given point of time. Okay. Now, what does trading mean? So this is for the people who wants to buy and sell crypto quickly. Okay. Sometimes this can happen in hours, sometimes it takes days. This completely depends on the price movements. Okay. Now, see, long term investment, we understood that people do it because it's safer. It's like, okay, bhai, in 10 years we'll get some good return. So that mindset is there. Why do people do trading then? Okay. Now, see, they try to buy when the price is low and sell when the price goes up. Now, this is the way to make fast money. Absolutely risky though. Okay. I will be very, very honest while I'm on the stream. Whenever you are thinking of a stock or of a crypto, never forget about the risk that is involved with it. Okay, it's not to create fear in your mind, but it's to actually keep you vigilant. It's to actually keep you informed when it comes to cryptocurrency, or it comes to stocks for that matter. Okay, see, I'll give you an example for this. Now, before Elon Musk appeared on Saturday Night Live, SNL, I don't know how many of you know about it, but you know there's something called SNL. And in 2021, before he appeared on the show, people expected that he'll talk about Dogecoin, okay, and its prices will shot up because he'll come and he'll talk about it, and it will it will just go absolutely up. And that's when someone just bought the Dogecoin. Okay, now before the show started, say if the SNL has to go live at 8, someone would have bought it by 4, like in the morning or something like that. Yeah. Now they bought it and sold it right after. The moment the show was over, say it's a 1 hour show, they sold it. Okay. And they could have doubled their money overnight. Okay. See, if you if you know a trend, if you know that okay, someone is going to come and this person is so influential that each word that he says can actually influence the whole market. Now Elon Musk is one such person. His words actually influences the whole market. Okay, now if you know that there's something new that has come in, the altcoin has come in, and now there are higher chances that Musk will be talking about this on this particular show. Now you already know that, you are a trader, you know that in a day or in an hour you'll have to do things, so you just go ahead and invest before the show and just sell everything after the show. This makes a lot of money overnight. Why? Because there are so many people who would have thought about it, there are so many people who would have bought Dogecoins, and that makes the prices go high, right? So by the time you sell it, the moment you think about sell, there are people who will just keep it for the long term, there are people who will just sell it then and there, so they make a lot of money overnight, right? It's like in an hour or two. Yeah. But if we have to see it in comparison to stock market, this is like a day trading. Okay, because stock market, again, cryptocurrency is something that is open 24/7, but stock market is not that case, right? It's 9:30 to 4, or however your country works for that matter. So people will buy and sell stocks in a single day. Okay, it's not hourly, it's not day wise, it's a single day. Day trading happens when it comes to stock market. Okay, so based on the news, based on the price chart, they will sit when the market opens, buy the stocks that they think are going to give them good return by the end of the day, and by the end of the day they will sell those stocks. Okay, now, this is riskier because prices can change quickly and you can lose money just as fast. Okay. Trading is like I told you, it's absolutely fast money, but then at the same point of time, you might also lose money as fast, right? So, this is something that you have to always sit and think through. If you are not aware with the market, absolutely not a very good option for beginners, honestly speaking, unless you know the market very well, unless you know the trends very well, you follow the news vigilantly. This is not going to be a very good strategy for you to go for. But if you follow the news, if you know the trends, and then again you are ready with your, you know your risk appetite, and accordingly you are investing, that's when you can go for trading. So that's very, very important to always remember your risk appetite. Always remember that is very, very important. Okay. Now, the next way that you can make money when it comes to crypto is staking. So, this is like earning passive income. Okay. What does this mean? When I say staking, what it means? See, some cryptocurrencies, they let you lock up coins. Okay. So, they will let you lock up coins in the network, and in return, you earn rewards. Okay. It's like getting interest on your money. Okay, so basically you lock up your coin in the network, and then in return you are getting some rewards. Okay, now there are people who choose even staking as an option. Why do they do that? Is because it's a way to earn without doing anything. Okay, you don't really have to do anything to actually earn money over here. Okay, you just have to, you know, buy the crypto, keep buying your crypto in the right place. Okay, that is also important. See, everything you do in the market, everything you do when it comes to investment, it is always about seeing what's happening. If you don't follow the news, if you don't follow the trends, there's no way you can actually make an informed and right decision when it comes to investing. You can do it by trading long term or even stick. The the reading part of it is very important. Okay, now let me again explain this to you giving an example. Okay, it's kind of like a fixed deposit. How many of you know about fixed deposit? Can you tell me? Yes, you put money in the bank, and there is some return, some interest on that, right? But you get paid the interest, right? I'll tell you one thing that has always been a concern in my mind, and as Indians, this is something that we don't understand, but we need to. Okay, now I'll just check one thing and get back to you. Let's check what's the. See, currently, if I say as of February 2025, India's consumer price index, that is CPI, the inflation rate was 3.6%, down from 4.3% in January. Okay, now let's see. You're talking about fixed deposits, right? So, see, for each bank it's a different kind of interest, right? So for 5 years to 10 years in SBI, it's 6.50% per annum is what you are getting. For HDFC, it's a different 35 months higher interest rates are offered for specific tenure. Let's check some of these banks. See, even for HDFC, if I see for 7 to 14 days, it's somewhere about 2.50. For 15 to 29 days, it's about 2.75. And it can go up to 6.50 in 5 to 10 years tenure. Okay. Now, the reason behind taking this detour was one thing that as Indians we have learned is to invest in FD, and many of us has FD accounts, right? Even I had at one point of time, my family has, and I'm pretty sure many of you would have FD account. So I would appreciate if you could comment how many of you have that FD account with different banks, and need not name the bank, that is not necessary, but at least tell me what is the if you know what FD is, and if you have invested in FD. See, there's one thing, one very like interesting information that I got. Okay, whenever we are seeing that we are putting money in fixed deposit, okay. See, since this is interesting, I'm trying to give it a build up. Okay, and if we spend some say about say we try to invest some money in FD, and we see that, oh wow, we are getting about 2% of return, or we are getting about 3% of return, or we are getting about 6% of return. Okay, great. The one thing that we miss out is what is the inflation rate at that given point before I'm investing, or whenever I'm trying to, like, break that FD and take the money out. What's the inflation rate? See, if the inflation rate and the rate of interest that the FD is giving is same, you're not making money, right? The investment makes no sense in your head then, right? This is something that has clicked in my mind, and uh, it was something that we were discussing, and we got to actually get into this topic, and we understood that, see, when you're investing in FD, it's very important to understand that the inflation rate heavily uh, disturbs the amount that you might get as interest, right? The profit and the loss, that completely depends on the inflation rate also. So yes, when you are doing the FD, this is very important that you check the inflation rate. If the inflation rate currently is 3.65%, say 3.65% or 4.15%, like that, if the current inflation is that, and when you are taking the FD, the interest is 2%, you're actually not making money, you're actually losing it. Yeah. Or if you say, if it is like 5% or 6%, you're not making, you're not exactly making money. You're making some money, yes, some profit, yes, but not much, right? So you have to always see what's the inflation rate when it comes to FD. Now, let's circle back to what we were talking about, because I took a detour and I just stayed there for a long time. Now, see, we were talking about stakes, right? Now, these are the cryptocurrencies that lets you lock up the coin, and then in return, they will give you some reward. Okay. Now, it's kind of like FD in banks. Okay, you put your money and don't touch it for a while, and you get paid with the interest. Okay, so say you own a coin like Ethereum. Hmm? Now, this is after its upgrade, so you are actually holding Ethereum 2.0. Okay, or Solana for that matter. So if you stake your coins, you could earn 5 to 10% annually depending on the platform. Okay, so whatever is the current market situation going on, and whatever platform you have chosen, even for FDs, bank to bank, the interest rate changes, right? For SBI, it will be different. For HDFC, it will be different. For IDFC, it will be different. For ICICI, it will be different. So every bank will have a different rate of interest that they are actually giving you, right? It might be a 0.% difference only, but there will be difference, right? The similar goes with cryptocurrency also. Each crypto will have a each coin will have a different value, right? So different rate of interest you'll get. The rate of interest you get in Ethereum will be different, Solana will be different. So like that, you will have to calculate which one is giving you a better rate of interest, and then go ahead and definitely invest on that, right? Now, stock market comparison, when we do this, is like receiving dividends from stocks or interest from savings. Okay. Now, see, when it comes to choosing uh, of the three, I told you this, that long-term investment, if you're looking out for, you can wait for a few years, then that is something that is good for you. If you are someone who wants to make quick money, then trading is something that is good for you. Now, when it comes to stakes, this is good for people who want a steady income without having to buy or sell often. Okay. Like, obviously, when it comes to trading, it's like every second there is buying or selling happening with everyone, right? You can buy now, and maybe in an hour you will have to sell it, because you are seeing that, okay, maybe the price is dropping, or maybe it's like it has touched its record high. So depending on that, you are taking that time out, and you are actually putting your mind into it to actually buy or sell the crypto, right? The coins that you have. But there are some people who don't really want to invest that much of time into it, and that is why they go ahead and they take stakes, because it's like sitting and just making money, right? Now, that's what it is. Okay, so holding is long term growth, like buying and then waiting. Trading is short term profit, flipping something you bought cheap. Okay, so you buy something in 10 rupees and maybe sell it in 100. Okay, staking is like passive income. It's not exactly that you're actively participating into market, but passively you are making that income. It's like uh, uh, earning interest from the bank. Yeah. So that's about it. That's about how you can make money in crypto. And I hope you understood it. If not, I told you that you can definitely go ahead and ask some questions, and I'm here sitting with you, and I will explain you what exactly uh, is there to understand. See, before we go ahead and talk a bit more about these topics, let's see. Let's ask you some questions. Let's see if you can answer them or not. Okay, I told you that crypto is a volatile market, right? So tell me something, is crypto a good investment right now or not? How will you decide that, okay, you know what, crypto is a good investment or it's not a very good investment? Yes, absolutely. See, it completely depends on what kind of risk appetite you have. Okay. Uh, yes. So if you have a risk appetite, a big risk appetite, you tend to take that kind of risk. But if you have a smaller risk appetite, you tend to take that kind of risk, right? But if you don't want to risk anything at all, then it's a different thing, right? So it completely depends on your risk level. If you want, you are in somewhere in between, you can take maybe low, maybe high, whatever kind of risk you are ready to take. Crypto becomes an investment choice accordingly. Okay, so if you are not ready to go for risk at all, then crypto, I mean, one kind of crypto doesn't really make sense for you. Like going for trading and all doesn't make sense for you, but you can definitely go for a long term thing. So that also becomes something, right? Choosing the kind of investment that you're doing and choosing what exactly you have to do in terms of risk, right? So why I say that when you go for investment, you go for a long term investment is because, again, you will have a lot of time in the market. You will know what is going to happen. Your money is over there. It's sometimes down, sometimes up, but you know that eventually you are going to make some profit, considering that you are keeping the money in the market for a long term, right? Trading, again, I told you that it is something that, if you choose, comes with a lot of risk, right? Comes with a lot of risk because morning, maybe, uh, say for example, morning, the stock you bought was of 100 rupees. Okay, you bought it in 100 rupees, and while following the market trends and the news around it, you saw that, oh, okay, it can go anywhere to 1000 rupees or 2000 rupees for that matter, and you're following and following. But by the end of the day, when you have to see, or 2 days also, if you wait, when you are doing in crypto, because it's a 24/7 open market, you see that the prices just went down and down and down, and now you have to sell because it's trading, right? Now, the moment you sell it, it can be risky, because if it's high, fine, you are getting the profit. But if the market is low, it's suffering from a bear market, then you get losses. So that is a problem when it comes to investment. You have to be very careful with that. Now, see, another question that I would like to ask you, because in the last stream I have definitely told you about it, and I just wanted to check if you remember that or not. And let's see, anyone who has joined new, if they know about it. If not, obviously I will be answering that for you. So tell me if you can start the investment with just 100 rupees, or $10. 100 rupees, okay, and $10. It's like the minimum amount that I'm telling you. Can you start your investment with minimum amounts? Yes. Yes. So, yes, you can definitely start with a small amount. And, you never know, you can make it big. And in the millennials segment that we did, I told you that there was this person called Eric Finman, and he invested $10, and he was 12 when he invested this amount, and within, like, I think 10 years or so, the investment amount was about $500 million or something like that. And it was an insane story. If you want, I'll give you a correct exact number, like, right away. I'll just check for that. And let's see, where is Eric Finman. Okay, yeah. So $12 per coin. Okay, it was $12 per coin when it was Eric's decision to actually make an investment into cryptocurrency, and it was 2011. And today, if you go ahead and if you check, it's something that will cross 7 million when it comes to, like, getting the profits. So it's like turned into millions that he has earned, right? So that is something. But yes, obviously, you will have to research market. You will have to see that you are making right choices when it comes to cryptocurrency, and you are sure about your risk appetite. If you don't know about your risk appetite, then you will have to first make sure about it and then go ahead with the investment part of it. Okay, so I was telling you about what are the ways of investing in crypto, and I told you that you can do long-term investment, you can do trading, you can also do stakes, right? There's another way that you can do investment when it comes to crypto, and that is ETFs and index funds. Okay, so what is ETFs and index fund? Can anyone tell me? See, let me tell you about index fund first. Okay, imagine you don't want to pick one company or one cryptocurrency to invest in. Okay, you want you want to mix the top performing ones. Okay, you don't want that. Okay, I'll just invest in this, or I'll just invest in this ABC company or XYZ company. You just want to mix the top performing ones, like the ones in the S&P's 500, right? So the index fund is like a thali, it's like a platter. Okay, it gives you a little bit of everything. Okay, say for example, a crypto index. Okay, a crypto index fund might include 30% of Bitcoin, 30% of Ethereum, 10% of Solana, etc. Okay, all in one single investment. One single investment you make, and you see that this is an index fund, so you have everything come mix. You have 30% Bitcoin, 30% Ethereum, like that. Okay, you don't have to track each coin. Okay, this fund does that for you. So that is index fund. Okay, first we'll understand what is index fund and what is ETF, and then we'll go ahead and see what the investment is all about. Okay, now let's talk about ETF now. Okay, ETF is very similar to an index fund. Okay, but this can be bought and sold like a stock. Okay, and this can be bought and sold like a stock on the stock exchange. Okay, so think of an ETF like a combo meal. Okay, you can buy at a food court anytime, prices change during the day, and you can sell anytime. Okay, so you buy it anytime, you sell it anytime, completely depends on you. So an ETF tracks an index or a group of cryptos. So when those coins go up or down, your ETF's value changes too. Okay. So that's what ETF and index is all about. Okay. Think of it again. Index fund is like a thali. It's like a platter. Okay. With many items That means your coins, your Ethereums, your Solanas, or your Bitcoins, like that. And ETF is a combo meal for you that you can trade. Okay. Now, the key feature that you will want to see amongst them when you compare, okay, the key feature is that in index fund, when you invest once and you forget about it. Okay. And that's one key feature. But when it comes to ETF, you can buy and sell anytime, like shares. Okay. So, why is it that people would like it? See, first of all, these are less risky than betting on one coin. Okay, because you're not betting on one coin when it comes to index fund, right? Specifically, you are taking Bitcoin also, you are taking Ethereum also, you are taking Solana, you might take Dogecoin. So, like that, you have split your money in different spaces. See, I'll tell you a real life example is that never keep your money in one space. Specifically, I remember when I was a kid, and if there was a large transaction that was happening, say for example, if we had to give our school fees and we have to get our clothes and everything had to be done, and if my father is going out and he is he is going to take some 2 lakhs or 3 lakhs out of the ATM. Okay, the one thing that my grandmother used to tell him, and my grandfather also used to tell him, was like, never put all the money in one pocket. Okay, always keep it split. Like maybe some is in your front pocket, some is in your back pocket, some is in that chore pocket that we have. So always make sure that your money is not in one place and it's split, so that if by chance a pickpocket comes in and he maybe just takes some money from one of the pocket, you do not lose all of it, right? So that's where that's the same with index fund, because you have put money in Bitcoin also, you have put money in Ethereum also, you have put money in Solana or Dogecoin also. That makes it less risky. Even if tomorrow, if say Solana sees a dip in the market, at least you have got some profit in Bitcoin and Ethereum, right? So that's what it is. It's less risky, and that's why people like to choose it. Okay. And it also auto balances over time, and it's a great investment option for beginners and passive investors. So if you're someone who is looking to invest passively, this is something that comes as a great investment option for you. And I'm talking about ETF and index fund, right? Now, let's see, what do we do with these funds? Okay, I told you what are these funds. Now, instead of buying crypto directly, you invest in the basket of cryptocurrencies through an index fund or ETF. Okay. So what is happening? You're not buying the crypto directly, and you are investing in a basket of cryptocurrencies, right? Obviously, there are so many cryptocurrencies. So through an index fund or ETF, you just invest in a basket of cryptocurrency, not in just one. Okay. And these are available in some countries or apps, so you can check that out if it is available, and then you can go ahead and select this option as investment. Okay. Now, again, I told you this is good because it is less risky and your money is spread across multiple coins, so it's less risky for you, and it's perfect for people who do not want to track each coin daily. Okay. Now, say for example, we have a coin switch Kuber's crypto index, Bitwise 10 crypto index fund. This is available in US, and ETFs like ProShare Bitcoin Strategy ETF. This is also in US stock market. So if you talk about so these are some of the examples of the apps that you can check out. Now, the risk level over here is low to medium. Okay, like it's not very risky, considering that the cryptocurrency market is very volatile. It's not very risky. It's low to medium, but there is absolutely some risk involved. Whatever investment you do not forget about the risk. Okay, that's always there. Now, see, there is also a crypto savings account. Okay, we'll talk about uh, crypto savings account. Crypto savings account is something that you can opt for uh, if you are planning to, invest. So apart from the long investment that you are doing, apart from the index and ETF funds that you are doing, apart from the stake that you are doing and the trading that you are doing, there's also crypto savings account. Now, what is it? When I say crypto savings account, what do you understand by that? Can anyone answer? Okay, let me tell you. Let me tell you. See, think of it like a fixed deposit, but instead of keeping rupees in the bank, you deposit crypto like Bitcoin, Ethereum, stable coins, Solana, etc., etc., etc. Okay. So savings account, you understood, right? Savings account is something that you also open in banks. The same way, even crypto gives you this option. Now in return, the platform pays you interest just like the bank would. Okay, this is also one way to invest. It's not necessary that you have to sit through and you have to do trading and long term investments. There are other options also, and I'm giving you those options. See, how does this work exactly? You deposit your crypto on a trusted platform. Okay, now this platform lends it to borrowers or users, and sorry. ठीक है, okay, so where was I? Okay, the platform lends it to the borrowers, or it, uses it in the other defi, that is decentralized finance protocols. So this is how it happens. Okay, they lend it to someone. Now you earn interest usually higher than what banks offer. Okay, in bank you can get anywhere between 5% to 12% annually, uh, sometimes more. Sorry, not in bank. Not in banks. I think I am very thirsty, and that is why I'm saying things that I should not be saying. Just give me 1 second. We'll take a 2 minutes break for water. I think summers have come, and yes, I've been speaking for 1 hour now. So yes, I was a little thirsty. Sorry for the interruption, but let's go ahead. Let's go ahead and talk about this. So, I was telling you how does this work. So, deposit your crypto in the trusted platform is the one thing that I told you. Then this platform, see, even banks, when you deposit some money, they just lend here and there, and then there are things happening, right? You understand bank, then you'll understand crypto savings account also. It's easy. Now, this platform will lend it to the borrowers, or it uses it in the other DeFi, yani ki, decentralized finance. Okay. Now, you earn this interest. Now, this is usually higher than the bank offer, like I told you. So, usually, when you put your money in crypto saving account, uh, you can get the returns anywhere between 5% to 12% of interest is what you get. Okay, sometimes more when it's for stable coins. Okay, now I'll tell you what are the top platforms as of now. It's Binance Earn, it's Coin DCX Earn, Coinbase, Nexo, and uHodler. Okay, so these are some of the platforms that you can actually look for. And everything, every investment, every savings account, all of them come with some pros and some cons. So I'll tell you some of the pros and cons for this. Now the pros are that they give you higher returns than bank, they give you a passive income, and some offer a daily or weekly payouts. Okay, but with the pros comes the cons. They are not insured like bank FDs. Okay, like I told you, this is very unregulated market, right? Banks and stock markets are very regulated because they work on economic policies. There's government involved, there's bank involved, but the same cannot be said about cryptocurrency. So it's not insured like bank FDs. And the risk if the platform goes down, okay, say for example tomorrow you invest in Binance, okay, and the platform just goes down, then uh, See, Binance, I'm just taking as an example because I just told you that name, but it's a reputable platform. So usually there is a less risk involved. But if you take some random XYZ platform and you just invest over there, then the risk becomes too high, because if that goes down, your money is gone, right? So you have to choose of the top ones, the reputable ones, that keeps it less risky. Now, the interest rates can also change suddenly. Like I told you, cryptocurrency is a volatile market. And since it's volatile, things are always, every second it's changing. So you have to be very vigilant about that also. Now, the question will be that after I told you the coins, you might ask yourself that, is it safe? See, stick to the regulated or well-known platforms. Then it's less riskier. Use cold wallets for large amounts if not actively earning, and avoid platforms offering too good to be true interests. Okay, there might be platforms that might come into picture and tell you that we are giving you 20% and plus interests. Please don't fall for these things. This is something that many of us might fall for, and this basically just brings sadness and loss in our life. There's nothing good about it. Okay, now see, I'll tell you why people go for savings account. There are people who are choosing this also as an option. So why do they do it? Because again, you earn an interest of 5 to 12% on your holding, and especially stable coins like USDT and USDC, they give you good returns. Okay. Now, I told you the platforms, Nexo, YouHodler, Binance Earn, CoinDCX Earn. These are good, like reputed platforms where you can actually go ahead and uh, invest. Okay. Now make sure the platform has good reputation. Always check for that. The ones that I've told you, but then at the same point of time, I always tell you that do not go blindly following me also. Go ahead, do your research. Never just listen and invest. Always do your research. Always do your research. Okay. Now, risk level in this kind of investment is medium. It's not very high, not very low. It's somewhere in between, and this is best for people who want passive income from idle crypto. Okay. Now, I use this term called decentralized finance. Anyone knows what decentralized finance is? See, I'll tell you, decentralized finance, or DeFi as we call it, it's like normal banking but without banks. Okay. See, cryptocurrency, I've always, since the beginning, we have started the stream, I have told you that cryptocurrency is something where banks and governments are not involved. And that is why it makes it is something that is very, transparent too, because of the blockchain where we have everything written, right? It's like a notebook. I told you in the last stream, I explained you like this, that it's like a notebook, and everyone can see every transaction that is happening. So it's very transparent that way, but then it is also unregulated, right? Because there is no bank or there's no government involved in it. That's why it's very unregulated market too. So when you talk about DeFi, that is decentralized finance, this is like normal banking. It's like normal banking, but the banks are not here. Now, instead of using a traditional bank to save money, okay, I'll just move a little closer to explain a little more. Okay, so it's like normal banking, like I told you. So instead of using a traditional bank to save money, get loans, or earn interest, DeFi uses blockchain technology. I told you blockchain is something that where everything is registered. It's like a notebook, right? So now this is mostly on Ethereum. Okay, DeFi uses blockchain technology mostly on Ethereum to offer the same services but peer to peer with no middleman. There is no one who is going to every day call you and tell you, "ये वाला loan लेना है. This loan do you want to take? Do you want to take these services? Do you want to?" Oh, you get so irritated with these calls. So, taking loans, taking credit cards, getting offers and all that, nothing like that is happening. There is peer-to-peer services that's going on over here, and there's no middlemen involved. Okay, let's do an analogy. Now, imagine a bank that runs entirely on code, not humans or buildings. Okay, it's entirely based on code. You log into a website, connect your wallet, and boom, you can save money and earn interest, borrow funds instantly, trade tokens without a broker, get insurance, or invest in mutual fund style pools. All without paperwork, approvals, or waiting in line. That's what DeFi does for you. Now, how does this work? See, DeFi is powered by smart contracts. Okay, these are automated codes that runs on blockchains. So they are powered by smart contracts. Okay, then there are D apps. Okay, this is decentralized apps. There is tokens. So instead of traditional currency, there are tokens. Okay, so DeFi is powered by all these. So no one controls them. Not a single person is controlling it. Okay, they're open source and they're all transparent. So this is how this DeFi works. Okay, now obviously there are some pros and cons for this also. See, there is a pro that no middleman is involved and the fees are lower. It's open to anyone with internet and wallet. And it's transparent and it's available 24/7, because again, cryptocurrency is a market that's open 24/7. And you can earn higher returns than bank. But with all these pros that you see over here, there comes cons. It's still experimental. Okay, bugs or hacks are possible. uh, there is gas fees that can be high, especially on Ethereum. See, now obviously they have brought Ethereum 2.0 and it will use less electricity, but this was something that will come as a con if you're using the Ethereum one, right? Now, this is also not regulated like traditional finance. Okay, so that also increases a risk factor a little bit, not much, but yes, there is a risk factor. And you control your money, so you are also responsible for it. See, today, if you lose your money because you have invested somewhere and the bank loses money, and because of that you have lost your money, you can definitely go ahead and blame the government, blame the bank, blame the company, maybe. Why? Because it's easier to do that in a regulated market. You can talk to them, you can get things sorted out. But when it comes to cryptocurrency, considering it's not regulated market, it's unregulated market, deregulated, I was saying, it's unregulated market. You control your money, so you are only responsible for it. Whatever profit, whatever loss is happening completely under your vigilance. Okay, so let's say you want to earn 8% of interest on a crypto. Okay, you can deposit your USDC in a DeFi app like Aave, AAVE. Okay, Aave. Now it lends your crypto to someone who needs it and pays you interest in return, all without a bank in between. Okay, so this is what the DeFi bank DeFi investment will do for you. Okay. Now, let me just give you a brief about how this works. It's like it will provide you liquidity to a pool and earn interest plus platform tokens. So this is how it will work for you. Okay. So for example, if you provide ETH and USDT to a Uniswap pool, you might earn 8 to 20% APR in fees plus tokens. Okay, but this can get technical and fees on Ethereum can be high. So one thing that is very important to note when it comes to DeFi way of investment and earning money from crypto, DeFi yield farming, when you are doing, basically the risk level becomes very high. This is called DeFi yield farming. Okay, now the risk level over here is very high, and it is best for tech savvy users willing to take more risk. If you are not willing to take the risk, do not go for this kind of investment. Do not go for earning money in this kind of investment. Okay. Now, we will be closing down our live stream for the day, but I would like to know I would like to know some of the things, and I would like to understand if you have understood that, if that was clear in your head, or if it is something that you're not very clear about, then you can definitely comment them down, and I'll be happy to answer. Or, in our next stream, you can ask me the question, and I'll be happy to answer. So, tell me something. How can I keep my crypto safe? This is something that I've told you, that you know how to keep your crypto safe. It was not a very long discussion. We'll be doing that in our next stream for sure. How to keep it safe, what are cold wallet, hot wallet, and things like that. But yes, I would like to know, how can I keep my crypto safe? Is something that you understood or not? See, I'll give you the answer, and I will definitely explain you more in the next stream. Always use cold wallet. Okay, use cold wallet. It's kind of an offline storage for crypto, so you can keep your crypto safe over there. Never share your private keys. I told you even in the last stream that, like when you put gold in the bank and you have this locker and you have a key, similarly for crypto, same thing happen. You have a key, and if you lose that, or if you give it to someone else, then your crypto is not safe, right? Avoid scams that promises guaranteed returns. See, there is no guarantee. Okay, there is nothing like guarantee. No one can tell you that, today you're investing 10 rupees and tomorrow I guarantee you that there is a 50% return. Please do not fall for these hooplas, because this is something like people fall for and then they regret it lifetime. Okay, so do not fall for these formulas where people tell you that you can make money in shorter period of time. It's not going to happen. There is always risk. Short period of time you can definitely earn by trading, but then at the same point of time, I told you that the risk appetite is something that you have to be very soul like mindful about. What do you think you can spend and how much you can lose? So that is something that you have to look for. So risk is always involved when it comes to investing, whether it is in a stock or it is in a crypto market. It doesn't matter, but there is always risk involved. So it's very important that you avoid such scams. Do not fall for things like, what, you can make a lot of money because you're investing in cryptocurrency. You can, but then at the same point of time, you have to be clear in your mind that it's not just about earning, it's also about losing, right? Now, tell me something. See, this is a very interesting question. Okay, will crypto ever replace traditional money? Today we have cash, we have phone pay, gpay, and whatnot, and we have digitalized ourselves a lot. But then at the same point of time, since crypto is coming into picture, this is also something that we would like to understand. So tell me, do you think that crypto will ever replace traditional money? See, true that there are many countries that are using crypto now. They are adopting to crypto, but honestly speaking, it's a long way. It's a long journey. To actually replace cash with crypto. So that's something that is very very important to note down. Now, last question that I would ask you is, can you tell me what time crypto opens and what time stock market opens and closes? Okay, it's a very simple question. It was a very simple question which I wanted to end up with. So that is basically 9:30 in the morning, 9 o'clock in the morning, and then somewhere in 3 to 4 they close down when it comes to stock market. But crypto is 24/7 open market for everyone. So that's about it, and we have covered a lot today. Um, and I hope we also kept ourselves hydrated while we were on the stream. So we have covered a lot today, how crypto market compares to stock market, what is the latest trend, and how people are making money from crypto. So I've told you so many options that you can go for. You can go for long-term investments, stake, there is trading, there is ETFs and index funds, there is DeFi yield that you can do. So there are so many options, and you can definitely go ahead and check out what is your risk appetite, or what kind of investment you're interested in, and go ahead and make money from crypto. So what is the biggest take away from this video today? See, crypto is full of opportunities, but it also involves risk. Okay, so do your research, never miss that out. Just because someone has said something, blindly following him or her is not going to be a good option for you ever. So do your research, invest wisely, and never invest more than you can afford to lose. So that risk appetite is something that you have to always be mindful of. So what do you think about the current market? Are you investing in crypto? Let's discuss in the comment section below, and let's learn more about crypto in the next session. So in the next live, we will explore on how crypto works, how it works, what is the world of crypto, what is a coin and a token, and more. So don't forget to tune in tomorrow, same time, same place. Until then, keep learning and keep investing. This is Juhi Singh signing off.